in early 2019, late 2018, we started to come across this early wave of financial applications. We called it crypto finance. Today it's called DeFi, but the term DeFi kind of was first used, I think in like February 2019. And when we identified kind of like the crypto finance opportunity, my entire focus centered on that vertical because I understood capital markets from my time in traditional finance. And I very quickly started using these DeFi applications. I was like, this is incredibly powerful.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Ben, thank you so much for joining me today. Super excited to chat with you. All right, Ben, you are the founder and managing partner of ParaFi Capital, which is a crypto investment firm launched in 2018, focused on both liquid and venture strategies, manage over $1 billion AUM, and you have extensive background in TradFi. You worked at places like Rothschild, TPG, KKR. All right, Ben, so take me all the way back. When did you first get involved or actually intrigued by TradFi?
I went to college at Penn, undergrad, and when I was an entering freshman, I actually had no idea what investment banking was, what sales and trading was, what the term kind of finance really even meant. I was a philosophy, politics, and economics major, was more focused on the liberal arts. And along that journey of just spending 4 years at Penn, because Penn has such a culture of finance, there's the Wharton School. It's a major feeder school to Wall Street investment banking programs. Kind of by osmosis, I ended up kind of getting exposure to that world and taking interest in it. Most of my focus actually, like as an undergrad, was on game theory and behavioral economics.
It's perfect.
And it's a very theoretical area, but it does make me nostalgic kind of thinking about it because I think understanding the incentives of different participants, and the economics behind different decisions it has been actually incredibly critical in crypto and in things like DeFi Summer and in just mechanism design. So it's I think back to like Steve Jobs when he dropped in the calligraphy class at I think it was the University of Oregon, and that informed like the typography on on iOS and on Apple operating systems. For me, it was like I just found it fascinating, and it ended up like actually like kind of being very, very informative in the investing world, but I didn't quite realize it at the time. But anyway, I went into finance just because I felt like, look, I wanted to optimize for learning, and I decided to go into investment banking because it was broad enough where I felt like I could pivot into anything in the business world afterwards. And one thing led to another, and I actually realized that financial markets were very fascinating places to spend time. And they were not theoretical like game theory, like you were actually in the arena using real dollars to, make decisions. And I realized very quickly that I was very passionate about investing. I spent the first 10 years of my career really mostly in investing roles, a bit on the sell side, but about 8 of the 10 years on the buy side. And my experience was unique because I didn't just invest in one thing. I actually invested in a variety of different parts of the capital structure. So I spent a lot of time in, high yield bond markets. I spent a lot of time in private credit markets. I spent time in private equity markets. I spent time in distressed debt, buying distressed debt claims. And I've always been a multidisciplinary kind of thinker, and I like to learn different parts of the capital structure and go through that process. And actually, in some ways, that's what led me to crypto because it was just another new asset class to learn and think about. And I ended up kind of coming across crypto in 2015. I was living in San Francisco at the time, and I was actually roommates with an engineer at Google. You would have dinner parties, and kept on the term Bitcoin kept on coming up. And so I was just lucky enough to be in the right place and the right time and be curious enough to want to learn a little bit more. And then once I did, I very quickly just kind of became fascinated with Bitcoin. That led me to Ethereum and smart contracts. And then the doors kind of flew open, and I ended up starting ParaFi in early 2018 was when I left KKR, which in retrospect was actually very, very bad timing because it was right at the end of the ICO boom, the beginning of a pretty long bear market that I know you remember, Andrew.
2018 was brutal.
It was brutal. And actually at that point, people say, 2022 was a brutal bear market, but it really wasn't in the same way because in 2018, there were truly existential questions about crypto. Like, will crypto, will the government kind of ban it? Will it be around? Can this technology do anything besides kind of be a non-sovereign store of value with Bitcoin? Because at the time we didn't have stable coins, we didn't have DeFi, we didn't have, NFTs, we didn't have blockchain games, we didn't have tokenized real world assets. It was really just Bitcoin and then a bunch of experiments. And obviously today, there's so many different things happening in the blockchain space. It's a very diverse economy on chain. But back then it was truly existential. But that was the beginning of the journey. And I guess it's been almost 7 years since I launched ParaFi, and it's moved in dog years. But I feel really fortunate to be able to do what we do in this industry. I've learned tremendous amount along the way, both about this asset class, this technology, but also just building businesses, working with founders. I've built incredible relationships with people. To me, that's been one of the most rewarding parts of the journey.
That's awesome. Did the hours that you worked in IB, did that prepare you for crypto? You're like, all right, I'm ready for crypto now. Were they crazy?
They were crazy. The work was a lot less interesting than crypto. In investment banking as an analyst, you kind of like would, build pitch decks and the deep in the trenches in Excel, and the hours were long, and you had no control over how you spent your time. In crypto, that's the most exciting thing to me about crypto. It's the most interesting place to spend your time because it's at the intersection of economics, financial markets, technology, cryptography, governance, behavioral economics. It like touches so many fascinating areas, political science. It kind of comes back to actually, my major in college, philosophy, politics, and economics. To understand crypto, you have to understand economics, you have to understand politics and governance and decentralized systems, and then philosophy kind of underpins that. So it is just a fascinating place to spend time. And that's why I'm glad that I'm in this space, because there's always something new, and it never, for someone that's intellectually curious, it's basically, just like a blue ocean of stuff to learn about, which I love.
Yeah, no, your background is just perfectly suited for the world of crypto, absolutely. But all right, so within TradFi, you mentioned that you were involved in different asset classes. Was there one that you were specifically more attracted to, or was it all kind of like, this is all interesting, but nothing compares to crypto, but it was all kind of interesting broadly?
Well, I really like credit a lot. I like credit because it's extremely technical in terms of understanding. It's a different kind of mindset. So like most investors are thinking, hey, I want to invest in companies that are growing and doing very well because, I can experience, the upside from that growth. And credit's very different because you don't necessarily get to experience the upside as a credit investor. You're more focused on the downside. You're effectively selling a put option. Your upside is capped. And so I kind of found that fascinating. And you can actually make a lot of money in credit investing in businesses that aren't very good, as long as you can get paid back and you're kind of underwriting collateral. I find that fascinating. And also, when you invest in credit, it can be very messy, particularly if you're going through restructurings where there are first lien creditors, unsecured creditors, customers and vendors and so on. It can be very, very messy. And each group may have different incentives and objectives in that restructuring. And so putting all those pieces together can be fascinating. And there's a lot of learning there. So, and again, I think that type of skill set is also important in crypto because it really forces you to think about like, what does each group want here? And are they aligned? But yeah, the credit has a place that's near and dear to my heart.
So when you were learning about Bitcoin back in 15, was there a specific aha moment? Because I know for me, I learned about Bitcoin 2013, bought some. I had no idea about the technology. I didn't know about the technology. I didn't care about the technology. I thought number go up, number did go up, and then went right back down. So I panic sold. But after that, I was like, oh, that was really interesting. Like, what is this stuff? And on the forums, everyone was talking about blockchain as a future, et cetera. Dove really deep. Took me months for it to click. And when it did click, it was like, it was like a flood, right? But that took a long time. I feel like most people didn't have that experience. They kind of got at a much faster pace than myself. But what was your experience?
Yeah. So my experience, there were kind of like two aha moments on Bitcoin. So the first was just this idea that you could have an asset that has a fixed supply, that's immutable, that's like cryptographically guaranteed to be fixed. Like, yes, you could fork Bitcoin, but that's, the actual canonical version of Bitcoin. You cannot raise the cap on it. And to me, like every other asset in the world you can be diluted, whether it's like you own stock in a company, they can issue more shares. You own US dollars, they can print more dollars. You own gold, like they could find more gold and bring it, mine it, and there'd be an increase to the supply. And we can go down the list of different assets, but there's something about that fixed supply of an asset where if you own 0.1% of all Bitcoin, you're guaranteed to never own less than 0.1% of all Bitcoin. And, there's Bitcoin that's lost over time as well. So if anything, you're kind of like accreting in terms of your ownership percentage of the network. That to me was just in a world where there is a lot of dilution and there is a lot of abundance and our political and economic system is set up to increase supply. I felt like that property for an asset is exceptionally rare. In fact, Bitcoin's a bit of a unique snowflake in that up to that point, it never existed. And I was at the time, this was like 2014, 2015, we had gotten out of the great financial crisis where we'd entered it in 08, so about 7 years earlier. And this term QE, quantitative easing, kind of entered the vernacular of like the media and economists, and this idea that the Federal Reserve could print money, simple as pressing a button, was I never really, like from first principles, like could really wrap my arms around that. And once I did, it became very clear to me that like Bitcoin was actually even more valuable than I thought it was. So that was moment number one, just the fact that it had a fixed supply. And then moment number two was when I first sent it. So I had downloaded the Bread wallet, which was an old wallet, that back in the day. I had sent some Bitcoin from my Coinbase account to that wallet. And my dad on his phone had downloaded a completely separate wallet. And I sent Bitcoin from my account to his, and we watched it leave my account and show up in his. And that experience on like two developers, different parts of the world, each independently built Bitcoin wallets, and I could send value to him. To me, having worked in the financial system was just from first principles, that was truly groundbreaking. That was my second one. Actually, I'm going to mention one more, which is, I love like studying history and periods of time where governments have confiscated assets, including the Holocaust. One of the things that resonated with me about Bitcoin as I learned about it was that it was truly the only unseizable asset that humanity has seen before. If you have gold, physical gold, a government can take it. If you have stocks in your brokerage account, a court can freeze those. If you have money in your checking account, easy for a government or bank to freeze those assets. If you have cash, that can get stolen from your home. If you have fine art, that can get taken from your home. The thing about Bitcoin, and this actually applies to all crypto, is that so long as you own the private key, no one can prove that you hold that crypto, and you can cross borders simply with a password in your head and carry your wealth from one country to another. I think is a very, very powerful concept in a world where there is, I view as meaningful left tail risk across the board. So I think that property of just like that economic freedom of being able to hold your own assets, they cannot get confiscated, you can cross borders with them, it's amazing. Just like, I can't think of a better word, but I think those things that all lead into Bitcoin. I mean, and we're talking about Bitcoin, but many of these things could also be said about, assets on Ethereum or other digital assets. It's kind of, these are like the core fundamental properties of blockchains. And I think that's very exciting and very, very powerful. So those were like the big aha 0 to 1 moments that I had with Bitcoin about a decade ago.
All right. So you were at Rothschild, TPG, Little John, KKR. You're actually a director at KKR when you left. So why would you leave? You had such an incredible background. You were well on your way at KKR to, maybe become partner, like just like a great, like the trajectory is very clear and very, very good. Why would you risk that going into crypto back then, which was like, even still now a little bit, there's career risk. Back then it was like it was a career suicide.
I, up to that point, had a very like kind of straight and narrow career path where I was kind of like moving up the ranks, doing well and comfortable. And I actually loved my job at KKR. I hadn't taken any real career risk. Like I had just kind of like been working nonstop for 10 years. I think it's very rare to live through the inception of a new asset class. It's really like a once every couple decade thing, right? Like it's private equity in the 1970s or, private credit in like the, 2000s, or like emerging market debt in the 90s. Like these are moments in time where there's an opportunity, and you don't always get to pick when you take career risks. Sometimes opportunity kind of slaps you in the face and you need to make a decision quickly. But I felt like the risk return of launching ParaFi at that moment in time was favorable. And I thought about it in terms of, bear case, base case, bull case. So I thought to myself, look, if crypto is what I think it is, I'm going to be a first mover in a brand new asset class, and there's an opportunity to build, a great firm, and like have an exceptional outcome. And if crypto's not what I think it is, then maybe I spend 3 or 4 years doing this, it doesn't work out, and I end up like kind of getting back onto the same track I was already on. And I had a lot of confidence in myself that I could come back, right? I think like 3 to 4 years of an experiment or risk in a career that is going to be many, many decades long is, to me, like, especially when like you have something like crypto that has the upside potential, to me felt like it was a good risk return, good trade-off. But I'm kind of talking in hindsight a bit right now, like, oh, it was like an easy and obvious decision, but it was actually a very agonizing decision. And certainly, in the first few months, as the markets completely deteriorated between me leaving KKR and us kind of like formally launching, as fundraising interest, I would say kind of like meaningfully dried up as the markets dried up. There were definitely some long nights. I just had my first son, who was a newborn. My wife, I remember distinctly my wife one night saying like, was this the right decision? Are you sure? So one of the things I'm fortunate to say is that I had taken a long-term view, and I was very fully committed to this. And so for me, I did have conviction in this technology, in this asset class, and in what I was doing. I set myself up to be able to be patient and kind of stay the course through the cycle. One of my mentors is Henry Kravis, who is, was a day one investor in ParaFi, and someone who I've just like learned a lot from over the years. And he was telling me, he would, when things weren't going as well, in the early days at ParaFi, I would go to have lunch with him. And I remember one, distinctly, he was telling me the story about how he started, KKR before the private equity industry existed. This was in like the mid 1970s. At the time, private equity was called bootstrap funds because the concept of buying a private company with debt, like that didn't exist. So they called them bootstrap funds. And he would go around to LP meetings, kind of describing his strategy. And he told me that, LPs would like fall asleep during the meeting because like they didn't understand what he was talking about. It wasn't interesting. But he just stuck with it. KKR's first fund was $31 million, their fund one.
That is insane. I had no idea it was so low.
It took them 2 years to raise. And, like we all know what happened from there, right?
Wait, so Ben, what's the rough AUM of KKR today? From 31 million to, I don't know, like
700 billion across.
That's insane.
Roughly. It's nuts. So he was like, hey, you need to stick with it. You believe in it. You believe in this. It's going to be an educational process for investors. It's going to be a lot of learning personally. Obviously, there's also a component of actually building a firm and being an entrepreneur while you're being an investor. But, and it's been, so there's just been so much learning along the way, but
that's so cool.
Here now, so.
Do you remember when in 2018, Bitcoin like was essentially stablecoin at $6,000 and it was just so stable? And you're like, okay, surely after all this damage, it can't go lower. And then it got cut in half and went to 3K. Now, when that happened, I was like, it's all over. Like I was so depressed. But
Thanksgiving, it was over Thanksgiving. Yes. That long weekend. And I remember, I was back, I'm from Seattle. I was back in Seattle with family over Thanksgiving. And when it fell to 3K, I remember it was going to be a tough Thanksgiving dinner company.
Yeah. Totally. All right. So when you decided to make the leap and launch your first vehicle, what was that first vehicle? Because I'm of the opinion still that traditional hedge funds and traditional venture funds are not the ideal structure for crypto. And I don't know what the answer is to like, what is the ideal structure for a crypto investment vehicle? Because as you mentioned multiple times, crypto is a multifaceted beast. You have some aspects of hedge fund kind of trading a little bit. You have some aspects of venture. So yeah, what was that first vehicle? And yeah, how is it launching that?
Yeah. So, it's interesting. So I think that just to kind of pull on a thread that you said, when people talk about, investing in the blockchain space, there are so many different things that could mean, right? It could mean investing in, liquid large cap tokens like Bitcoin, Ethereum, Solana. It could mean investing in liquid small cap or mid cap tokens that are more idiosyncratic and more alpha driven. It could mean quantitative strategies in the space, or kind of more market neutral strategies. It could mean investing in companies in the ecosystem that are building real kind of SaaS or fintech businesses. It could mean investing in companies before they launch a token. Or it could mean investing in an already public token in a private placement where you're buying those tokens at a discount to market prices and agreeing to a lockup. And there are 7 or 8 or 9 other areas even beyond the ones I just mentioned. So crypto is a technology, blockchain is a technology. It's also a new asset class. And I think for any investor, the format of the vehicle, the structure of that capital needs to match, their objectives as an investor. It had to match their kind of like liquidity profile, and it has to kind of mirror their risk return, and they have to kind of like understand that. When I was launching ParaFi, candidly, I didn't have all the information that I have today in terms of how this industry has evolved. So we really just started with like, hey, let's raise a fund that, kind of go anywhere to wherever the opportunity is and has that flexibility. I mean, we have the view initially that this technology was going to grow meaningfully over time, was going to create a lot of value. So yes, it's interesting to be kind of non-directional or capture alpha. And, we have strategies that do that today. But the goal was like, look, we're sitting on something we think is a 10 to 500x opportunity, or we did when we launched. We wanted to be long this technology. We wanted to capture both the beta, but also the alpha. Because, while it would have been interesting to like trade around Amazon in like the late 90s, it would have been more interesting just to be long Amazon. It's a lot easier. So that was really like kind of the first focus when we launched.
Very cool. And okay, so fundraising back then, again, you were talking about the legendary Mr. Kravis and, how he launched KKR and took him 2 years to raise 31 million. What was it like for you? 'Cause 2018, abysmal year. So how were the conversations and also who were you talking to? Were you talking to people that there wasn't like a group of other crypto fund managers you could talk to and kind of pitch your ideas to? There was, were you talking to hedge fund guys? You're talking to private equity guys or just high net worth people in tech? Like what was that fundraising environment like?
Yeah. So it was really, I remember I would drive like an hour and a half down to Palo Alto to have coffee with a high net worth individual who, maybe would be willing to write like a very, very small check. Like I was willing to talk to anyone. But back then, I mean, just generically, like the capital that was getting allocated to this space was all high net worth or small family offices. Over time, at ParaFi, that's evolved and changed as the industry's become more institutional. You now have, endowments, foundations, pensions, serious fund of funds that are allocating. But in the early days, it was seen as just like a very high risk. I mean, it's still seen as a high risk area, but it was seen as it's kind of put on the same level as say like investing in like a cannabis dispensary. It was seen as like more of like a vice industry. It was seen as very risky. So those conversations back then were much different than they are today. I mean, I would say the questions that I got was, what if the government bans it? What is it useful for? Why is Bitcoin useful if I can't use it to buy a cup of coffee? Is it Bitcoin and crypto just used by criminals? If anyone can fork Bitcoin and copy paste it, how is it cryptographically scarce? Right? There were like the 20 questions that you would always get in those meetings. And I think I put together like an FAQ at some point because literally every meeting had the same questions. But today, I will say the industries or the allocator community is a lot more intelligent and shrewd when it comes to knowing what questions to ask. I think people have moved past those questions, but every cycle there's like a different set of questions. Like I think in the last cycle, like let's go back to 2022 post FTX. I think the question, the kind of North Star question was, what are the use cases? Like, what is this technology used for besides speculation? And then it was a process of explaining to people how stable coins worked, DeFi, DPIN networks, tokenized real world assets. Now we're talking about AI agents. I mean, obviously you've planted your flag and kind of thinking about the metaverse and NFTs and consumer, and there's a tremendous amount happening there. So, but that was kind of the question du jour of this past cycle. So I think there's always going to be like those focus areas for allocators when they're underwriting this asset class. But I think it's been very encouraging to just see how much it's evolved since 2018.
In the early days, when you were making when you're deploying that initial capital, how are you diligencing projects? Would you find a certain protocol or token or company and just like give them a ring and be like, hey guys, like, can we talk and just kind of figure out what these guys are building, what this thing does? And, they just told me that initial like diligence process back then, because it was such a crazy period and information was scarce and like, who knows what was true, what was not. So like, to tell me about that initial diligence early on.
In 2018, it was a process of being more like top-down research, like getting, understanding the landscape. But in early 2019, late 2018, we started to come across this early wave of financial applications. We called it crypto finance. Today it's called DeFi, but the term DeFi kind of was first used, I think in like February 2019. And when we identified kind of like the crypto finance opportunity, my entire focus centered on that vertical because I understood capital markets from my time in traditional finance. And I very quickly started using these DeFi applications. And I was like, this is incredibly powerful. And then from that point, I just made it my kind of modus operandi to meet with literally every single DeFi founder which at the time was like, you could do it because there were, maybe 20, 30, 40 globally. And so I started being aggressive about getting on airplanes, and trying to, going to events and trying to meet and talk to anyone building a DeFi application. So that led ParaFi to, Uniswap. It led us that we were the first institutional investors in Aave. We were kind of V1 users of Uniswap when it had like 20 million of TVL. We were, very early users of Compound, Kyber, which is a name that's not even around anymore. We were early investors in Lido. So we that first wave of DeFi was really where we saw tremendous product market fit. But candidly, I was a complete outsider in venture. So even though I was in traditional finance for 10 years, I was a complete unknown in the venture kind of world. I wasn't, spinning out of A16Z or Lightspeed. So I had to learn venture. That was, so it was just like a bit of a different motion for me, but I was able to do it. And that's really how we spent those first few years, is just all in focusing on DeFi.
That's super cool. So, okay. So that was, you mentioned that now there's multiple different subsectors within crypto. What are you guys focused on today? And I know that's, there's a lot of things, but are there areas that you guys are specifically more excited about and areas that you're less excited about? And how do you think about the kind of ever-changing narratives within crypto? Because, for example, 21, time of NFTs. Before that, there was DeFi. Now, I guess you could say 24 is probably meme coins. Now it's agents. So I guess, what do you guys look at today? And then how do you view the ever-changing narratives within the space?
The way I kind of think about it is we are focused in a few different areas, but most of our thesis, I think, in terms of the power of this technology, really centers around financial use cases. I think within DeFi, you're going to see over the next decade just material on-chain earnings and compounding from a lot of these names that have kind of been left for dead, but have been fundamentally growing users, volume, smart contract revenue, smart contract earnings. Stable coins, obviously a very meaningful theme, even with this market sell-off over the past month. I mean, USDC supply is up to already 55 billion. Stable coins as a category up to 200 billion outstanding. The volume rivals, Visa, and those numbers are only going to grow. If you look at kind of active wallets sending, receiving stable coins on chain, this has been compounding at a 40 to 60% growth rate over the past 5 years. And there's very clear catalysts for that to continue. Tokenized real world assets, what you've seen with, BlackRock tokenizing treasuries and also tokenization of private credit. I think you're also starting to see it in the long tail. We recently invested in a company that's tokenizing, high-end luxury watches. You've seen companies tokenize things like carbon credits or more esoteric asset classes. And I think that the theme of DeFi, the theme of stablecoins, the theme of tokenized real-world assets are all a bit one of the same, because our thesis generally is that the $600 trillion of global assets, stocks, bonds, currencies, and commodities, will slowly migrate onto on-chain infrastructure, will move on-chain, and that will be the ledger of record. And that smart contracts enable you to do things with these assets that are a lot more expensive or a lot less transparent than the traditional financial system. So I think we're in a very early stage of that happening. And I think it will happen gradually and then suddenly. And I don't think really a technology-ish adoption issue today. The technology, I think, by and large, is there with some fine-tuning, but it's really, I think, a go-to-market and cold start problem for institutions to start using things on chain. And then look, I think I think there are other areas of DeFi that I kind of consider kind of the next wave of innovation. So it's not like we're just going to literally rebuild the current financial system in smart contracts. I think there are new, more radical types of financial infrastructure. One example is prediction markets. So ParaFi is the largest investor in Polymarket, which is the largest prediction market. I think that you can think about prediction markets like betting platforms, but you should really think about them like insurance platforms, where there's open market for underwriting the probability of an event occurring. There's a lot of exciting kind of other new DeFi primitives that I think we'll see in the cycle. And then look, like we're very active in thinking through like the agent space. I think that the majority of block space smart contract interactions will be done by agents, and everyone will have their personal agent that does financial activity on their behalf. I think that the wallet UI will look and feel more like an LLM interface where you ask your agent to do something, and then it goes and executes on your behalf. I do think just from first principles, like it's difficult for, you can't have an agent that opens a physical bank account easily and then does all the things that you'd want it to do because of the limitations on sending very small micropayments, as well as just the clunky nature of banking APIs. You truly need a 24/7 global network. And I think that the AI to AI economy, so AI agents sending funds to other AI agents, will probably be bigger than the human to AI flow. And so, look, I think blockchains are just tailor-made for this. And so we've been spending more time there. And then lastly, like DePIN, I think DePIN is really fascinating. It comes back to game theory. Like you can give people tokens to get them to do something in the real world. Look, I think agents will pay people to do things in the real world, pay humans. So the idea of DePIN and DVIN, which is decentralized virtual infrastructure networks, I think are absolutely fascinating. But the last thing I'll say is like our kind of mission at ParaFi and our North Stars, we want to invest in use cases for blockchain technology that bring real GDP onto blockchain. So that's kind of like our North Star, like what industrial, practical sources of GDP or GDP-like activities in the real economy can we move on chain? We want to increase the GDP of the Ethereum economy. We want to increase the GDP of the Solana economy. We want the GDP of blockchains to kind of grow over time. And we want that GDP to be very substantive, very, very real, as opposed to kind of more just pure speculation. I think a little bit of speculation is normal, but we want it to be as substantive as possible.
You said that you think that the tech is ready today. Do you have issues with, let's say that all the financial institutions, not all of them, but a lot of them are like, okay, great, we love blockchain. We're going to now start using these protocols and whatnot. Would you not think that Solana and ETH would get extremely expensive, and you don't think Solana would kind of break down? Like, do you really think the tech is ready? Because I want to believe that. And according to a lot of these other chains out there, their TPS is way higher and blah, blah. But I don't know. I just feel like, Solana just had its first year without having an outage, which is great. But, and went through the Trump mania, the Trump coin mania. So maybe we are there. But do you actually feel like it's ready? Because I still feel like I want to be ready, but I do feel like we're still pretty early.
Yeah, well, I guess like the way I think about it is, look, like even the traditional financial system like breaks down and has outages all the time today. So I don't think it's like run seamlessly if you in a vacuum ported all financial activities onto Solana or onto all blockchains. Like it'd be very naive for me to think that. But as I like extrapolate the rate of progress and scalability in like block space, I think that where blockchains will be over the next 5 to 10 years, I think we're in a position today to like, you can kind of squint and see that future state where it's capable of happening. I mean, look, I think already you can do tremendous amounts on blockchains, and the constraint is not scale. I think the constraint today is not scalability. It's more, okay, like the institutions like actually have to start using the blockchains, and maybe it's like they're going through their internal process, or there's not enough, like there's a bit of a cold start problem, because if you own a tokenized asset, it's not really useful unless other people are also owning these assets and want to transact on chain. I think the constraint in like 2020 like when gas fees were very high on Ethereum, was that scalability. Today, the speed and cost of transactions going through. There were also probably like security was, I think, a major smart contract security was also like a major risk. I think regulatory environment was a major risk. Today, I think like all those things have improved meaningfully. Security, scalability, regulatory. So I think today it's more about, I think all those things are growing. I think the constraint today is really institutions are just slow to move, but I think it's starting to happen.
It's also, I mean, you know this probably more than me, but when you're trying to manage a portfolio where you have like, 10 different assets on 10 different chains and you're trying to like bridge here and do this, it's just like a total nightmare in terms of that. But if you're doing activity on one chain, it's like amazing. You're like, oh my gosh, I'm now doing this DeFi thing. I now have funds over here, blah, blah, blah. But it's when you're interchain, that's when it's like, I actually just spoke to recently, Sergey from Axelar, and that was a really interesting conversation because I think that interoperability is so important for the future. But anyhow, I do agree with you. I think in terms of transactions, it's like we are ready. But in terms of that cross chain, it's still complicated. But I don't imagine JP Morgan or whatever using like Chain and using like Solana and Ether. They're probably gonna choose one and build out from there. But cool. All right. So tokens and equity. As a firm, are you guys more focused on tokens or more focused on equity? And also, how do you view tokens? Because there are the design space on tokens is so limitless. Like you can make them do and be so many different things. Like one token can send you cash flow and then just kind of be like a quasi equity instrument. One token is like a purely an incentive mechanism for like this certain consensus or whatever. So I guess like as a firm, tokens or equity, and then how do you view and look at tokens?
Yeah. So we invest across both. And I think they're both interesting. They both have different, times to liquidity. They both have different like risk return profiles. They both have different valuation frameworks. Tokens, as you point out, like the taxonomy of the token space, like some things are more like crypto commodities. Some things are more like capital assets where you can run a discounted cash flow. Some things have no real intrinsic value, whether it's like something like Bitcoin or something like a meme coin. Whereas equity has a much more established valuation framework. You can, for example, you can look at like a business like Anchorage or Fireblocks or Coinbase and value it very similar to a brokerage or a bank or a fintech company or a software business looking at, those traditional metrics. So look, they're very different, but we do both. When I was first looking at DeFi in 2019 and 2020, what was really remarkable to me about these DeFi tokens was they were very cash flow generative in that like these were basically, I think about these networks as toll booths on the internet, clipping small fees of every transaction and value flowing through their system. And these were networks that didn't have any, like in many cases, didn't have any direct cost. Yes, they may have been a DAO and may have given grants or paid developers off chain, but generally they had very high EBITDA margins, had very low CapEx, if not no CapEx, and could get to scale incredibly quickly. Like, I think Uniswap launched with 11 people and, no more than like $10 million of venture capital. And it's, at that point had processed like over $1 trillion of transaction volume. These, from just a purely financial standpoint, you could look at these DeFi tokens and say, wow, these things are growing quickly. From a price to earnings basis or on a pure cash flow yield basis, you could, if you were to comp these against traditional software businesses, you would be extremely excited. Like, I think I used to say, if you like the business of software's been like the best business model of the past couple decades. If you like the software business model, you're going to love the business of either selling block space if you're a layer one or an application layer project, particularly in DeFi. And I think that still holds true today. Kind of like maybe naive at the time was just because something's cheap and fundamentally very attractive from a growth or cash flow standpoint doesn't mean that other people will appreciate what you see in those tokens. I think part of the challenge is that the majority of investors in crypto are not fundamental investors. They're also not long-term investors. And the capital in crypto tends to be very short term and tends to focus on event-driven catalysts as opposed to long-term fundamental compounding. And then additionally, it's also very difficult to actually calculate a price to earnings ratio on a token. Do you look at like the last 30 days annualized? Do you look at the last year trailing 12-month period? In the numerator, do you include like all issue tokens, or do you just look at what's in circulation? Do you consider like token grants as like kind of non-cash comp? Basically, because there are no GAAP accounting standards that you can apply to everything, it requires each investor to do their own bottoms up work to reach kind of the conclusion. And I think in this past cycle, like there just haven't been, when I say this past cycle, I really mean in the history of crypto, there haven't been enough investors that are institutional or doing that work. But that is our North Star. Like we want to buy things that both have strong fundamentals, but are also not reliant on external capital buying them. So when we look at liquid tokens, we really are focused on protocols that are buying back their own token or returning their earnings through a dividend, because then you're not reliant upon, crypto Twitter or other pools of capital, like appreciating your thesis and buying into it. You need to have that kind of fundamental. We think protocols will be the largest buyers of their own tokens, similar to a company being, using its free cash flow to buy back their own stock. That has like kind of emerged over the past couple of years in our investment process as like a true North Star in terms of evaluating liquid token opportunities. There's a lot more to say here. I mean, I think that, I don't want to go, off on too much of a tangent, but I do think that liquid crypto markets are, somewhat broken for a variety of different reasons. And look, that brokenness creates tremendous opportunity. So they're broken. I mean, like the median altcoin has performed like very poorly relative to something like Bitcoin, Ethereum, Solana. And I think that's a function of like very poorly designed token economics, very poor incentive alignment with the team building these networks, and a whole host of other things, including like just fragmented liquidity and fragmented attention. There are 15,000 tokens listed on centralized exchanges globally. That's about 5x the number of publicly listed companies in the US. It's like kind of spreading cream cheese on a bagel. Like there's not enough demand and there's just this endless sea of supply. And I think that is a problem, candidly.
Yeah, no, the dispersion is another, another whole topic that we could dig into. But in terms of the fundamentals versus the kind of speculators, do you foresee a period? Because back in 2018 and 2019, I was like, okay, bear market's brutal. But my guess is going forward, people are going to focus on the fundamentals. That was like back then. I was like, convinced. Like next cycle, it's gonna be really fundamentally driven. Absolutely, like didn't happen whatsoever. It's like ICO craze 2.0. And then this cycle, it's meme coin craze, right? So it's like, okay, fundamentals are still not popular, relatively speaking, comparative to like the attention driven stuff. When do you imagine fundamentals will play a larger role? And also, I want to caveat that it's not to say that fundamentals are zero and don't work and people don't care about fundamentals at all. It's just that what tends to outperform is what has attention in crypto at that period of time.
It's a great question. I think that fundamentals are being reflected in market prices today. It's not like a binary thing, like they're not or they are. It's a question of like how much. And I think if you look at the companies that are generating meaningful on-chain earnings and are buying back their tokens, I mean, that is like there's incrementally more demand and holding supply constant, that has had an impact on the price. I do think, if you look at like the top earning protocols in DeFi and just broadly across Web3, those tokens have outperformed the other infrastructure or other tokens that don't have as many earnings. Kind of like, let's separate meme coins for a second. So I do think that fundamentals do matter. It's just a question of how much. The other thing like that I'd say is in traditional equity markets, public equity markets, you may have like a SaaS company trading at like 30 times earnings. and even trading at like 30, 40 times earnings, there is a big element of making that investment to underwriting, like, will the multiple expand or contract? Typically, like multiple expansion and contraction plays a far bigger role in investment outcome than actual earnings growth itself. And so there is a big speculation component, I think, to investing even in public markets. Like, I think there's people in crypto often say, oh, crypto markets are very speculative. There are no fundamentals. Public equity markets are very fundamentals driven. There's no speculation. And I think that's like way too reductive of a view to apply. Like, public equity markets have rampant speculation. And you see that in you can see that with companies that basically don't grow their earnings and get massively higher multiples during periods.
Palantir, for example.
Exactly. Like anything that's, touching like the latest narrative. So, but look, I think over time, like, crypto has, in the altcoin market, been like really a predominantly retail driven market, and institutional crypto funds are a very small portion of that market. I've got to believe that number is going to grow over time. Like, there'll be more and more capital allocated to liquid crypto. And those investors tend to be, more focused on fundamentals, which should drive up the price of those fundamental tokens, which should encourage more inflows into those fund managers. And you get reflexivity. When does that happen? I think it just happens like gradually over time, as it has been.
On the venture side, when you are assessing a company, I know some people, they look at the market that the team's building in, and that's kind of not their singular focus, but they're like, oh, what really matters is the market here. Some people look at the product, some people look at the team, et cetera. What are the factors that you think are most important, or that you lean most into when assessing a founder's kind of whether or not you're going to invest in a venture style company?
Okay, so in the early stages, I'm more of a team and kind of founder maximalist. You look at it, across ParaFi's history, we've made like 200 roughly venture investments in the space. We have a pretty big sample size, and we've crunched a lot of the data around like what were we underwriting, what ended up happening, success rates. So we have a pretty big kind of N. I believe in the early stages, business models change, products change, markets change. You want to back the right person. And typically there's a power law, like the founder, even if they're co-founders, you're really underwriting like one founder and their determination to will an idea into existence, and kind of like bend the universe, so to speak. That to me is the most important thing. And I can't tell you how many examples of companies that pitched us on, one thing in the early stages and ran into brick walls and ended up pivoting and building something, dramatically larger. I think in kind of the more growth or post product market fit stage, I think while the founder is still critical and the CEO is still critical, I think the analysis really comes much more down to unit economics and moat of the business. So really, and market growth, but really understanding like, why does this business have the right to earn high margins? Why will it earn high margins in T plus 3 years, T plus 5 years? Why is this business of strategic value? How can this business drive increasing ARPUs with its customers? What are the kind of margins of this business in equilibrium? Will Coinbase build a competing product and take market share? That's always a question we have. Like, if Coinbase and Binance started an identical product to what this company is building, what would be the market impact? So for me, it's a much more of a quarters, five forces business analysis when you're looking at the later stages. I also really think it's important for founders I like to understand the management team's style of running a business. Are they the type of founder that like wants to kind of like burn heavily, are comfortable with having less than a year of runway, are constantly raising and trying new things? Or are they like more, okay, let's get to profitability very quickly. Let's minimize dilution. Let's be very disciplined around costs. I think there are examples of founders that have been successful with both styles. I do like to understand that. I also like to understand the capital structure of a company, the governance, the financial reporting. I think all those things are critical in my mind to having like that successful kind of foundation for growth.
When you're thinking about building your own team, because you guys are active in many areas of the capital stack within crypto, what do you look for? Are you looking for like people that are extremely crypto native and, in TG all day and, trading meme coins? Or are you looking for people that come from Goldman and more TradFi backgrounds, or maybe a mixture? Like what are those traits and things that you look for when building ParaFi?
We've hired a mix of people from traditional finance, bringing them into crypto. We've also hired people that, have never looked at financial statements and are more truly crypto native. And so we have a healthy mix. I think that what we're looking for in our team are more character qualities, determination, work ethic, integrity, curiosity. Those are kind of like our, teamwork, I think, is a big part of ParaFi. So those are things that we look for more than, like what someone's specific background is. And the other thing that we want to have like a lean team here, just because I think, we've learned, post ZERP, post like what we've seen with cost cutting across the tech space, like one of the big takeaways is everyone can do more with less. And the lazy thing to do when you want to grow is to just hire more people. It's like, let's hire more engineers and throw engineers at the problem. Well, actually hiring engineers almost always slows down product development. It does not speed it up. And same with like, in the investment management space, hiring more investors doesn't necessarily produce better returns. I think like our goal is keeping a lean team and finding people that have that ownership mentality and just like love what they do and can't imagine themselves doing anything different. I think anyone that was like, stuck through crypto through the last bear market and is still in it today, has more of that, missionary versus mercenary mentality. Even with founders, like you kind of want to back someone that will be in crypto no matter what. I think we were talking, Andrew, maybe a few weeks ago, and you were like, hey, like just this, like I want to build like super long-term. I'm very patient. I love what I do. I love the space. Like, I think when you hear that from someone, it just like, to me, that's like the most important thing you can hear. Like if you're investing in a fund manager, in a founder, if you're hiring someone onto your team, that like long-term alignment and people that are in this industry for the right reasons, to me is like, that's the holy grail. And that is the North Star. And, versus there's so much short-termism in crypto. And so like, you want to kind of avoid that and lock arms with people that are much longer term. So yeah, those are some of the things that we look for at ParaFi.
Love that. All right. Can you describe a kind of a challenging moment, like crucible moment that you've experienced while operating ParaFi? I mean, obviously you've been in it since 18 full time. So it's going to be, I assume you'll have some stories.
One moment that comes to mind was Black Thursday in DeFi. This was in March 2020 when lockdowns were happening, COVID lockdowns were beginning to happen, equity markets were crashing, crypto markets were crashing in sympathy. We had a very large investment in MakerDAO, and MakerDAO, DAI had depegged to the positive. It actually, DAI was trading at $1.20. The reason being, and this is a stable coin, the reason being is people wanted to buy DAI to delever, to pay back their debt because their collateral value was dropping, but there wasn't enough DAI on exchanges to buy it all. So people were willing to bid up, and there was just like no DAI in circulation. And the entire MakerDAO system, and in turn, other parts of DeFi, because everything is so connected within DeFi, were breaking. I remember that day waking up at 4 a.m. I had a bad habit. I still kind of do, of waking up in the middle of the night and like checking crypto prices. That night, like before this started at 3, 4 in the morning, and altcoins were down, like Bitcoin was down like 40, 50%, and altcoins were down like 60, 70%. Like, and they were like kind of, and then they took another leg down at like 4 o'clock that day. There just wasn't a lot of capital in the industry at that time. So ETH dropped to like $85, $90. And I remember,
Wasn't it like 80, 82?
82. Yeah. Like we got down to like, we were putting on like an all hands call with the MakerDAO community. We had to add USDC as collateral, like as an emergency executive vote. There was a bunch of detail that happened, but I think that day, if ETH had actually dropped below 80 before 6 p.m., before we could get this vote passed, MakerDAO would have pretty much like blown up.
Wow.
If that would have happened, other things in DeFi would have blown up. I think it would have very much undermined confidence in DeFi and this technology. And maybe we wouldn't have had DeFi summer, and maybe we wouldn't have had 2021 to the extent that we did. Maybe we wouldn't be here, where we are as an industry today. So I think back to that day and it being like an incredibly stressful day, but also it was also exciting in a way. It's interesting to look back at like the path dependency and what could have happened that maybe would have impacted, maybe the world would look different today if something else had happened back then. But that was certainly like it felt like a 5 or 6 standard deviation, like negative move in the market. So a true stress test. And, of course there was 2022. We're working with our portfolio companies through the crypto financial crisis of Genesis, BlockFi, FTX. Navigating that process had its own challenges, but my stomach lining at this point is so thick. Like, I don't feel stress to the same extent that I feel stressed about different things, but maybe working with founders where I want them to move faster or want them to cut costs, but in terms of like market prices, which is something I can't control, I feel very little. I feel a lot less stressed about that than maybe I did, 5-6 years ago.
I mean, that's so true. I think as you get quote unquote older within this ecosystem, like the recent move that we've had to the downside, and I was just like, oh, that sucks. But if you go on Twitter with some of the kind of the newer cohorts of users and whatnot, they're like, you can see like joined in 2023 or whatever, joined in 2024. They're like full on, like, is this over? I'm like, oh, first time, that meme where they're like, on the thing, but very cool. All right, so we have a new administration, supposedly crypto friendly, launched a meme coin, like some pretty crazy stuff. It's looking much brighter than the previous administration, and people are saying, oh, institutions are actually going to come in. We're going to have more adoption on the kind of financial side. What are your thoughts on that? Are you seeing that? Are you hearing that? You just tell us what you can about that.
I think that there's been more positive regulatory developments in the past 2 weeks than there's been in the past like 15 years since the Satoshi white paper. And I don't think that's like a controversial statement. I actually you can almost describe what I just said as a fact. Candidly, like it's sometimes surprising to look at market prices and see that we're maybe up like 30% from November 5th, the election, despite, I would have, in a vacuum, if you would have told me like all these things happened, crypto and AI are national priorities, stablecoin legislation, conversations about Bitcoin strategic reserve at the federal level, 22 states discussing a state level Bitcoin strategic reserve, descendants of the president launching a DeFi protocol on Ethereum, buying DeFi tokens.
Bitcoin's $1 million, like obviously.
Yeah, exactly. You would have said, and you would have been 30% higher. I would have said, no, you should be orders of magnitude higher. But look, I think the reality is that I think there's never been more reason to be optimistic about crypto in the US and therefore crypto globally, because the US is, even though it's only 4% of the global population, it's 20% plus of global GDP and a much higher market share of kind of global capital markets. And you've seen this firsthand at Suffermion, which is like if you're a US crypto founder, in the past cycle, it's been very, very difficult to build with clarity. And that is all changing with Paul Atkins at the SEC, with Hester Pierce. I'm incredibly optimistic and excited about just the shift in the regulatory. Now, look, I don't think that solves like every issue for crypto. Like we still have to continue to build real use cases, real things on chain that have great user experiences. We still have work to do on like making block space scalable. So like, it's not like, hey, let's all pack our bags and go home. Like we're good now. But I do think that this major risk that kind of fell out of the industry's control is now, it's turned from almost like a risk into a it's turned from a headwind into a tailwind. Like that's the other thing I think people don't realize. It's not a risk that's now gone away and is now neutral. It's actually a tailwind now. It's a positive because this is such an area of critical importance. So I think the market does not, in my opinion, appreciate just how positive has been and will be in the coming months and and years.
It goes back to exactly what you said about how the crypto market, most of the participants are very short term in their view. And yeah, I mean, if you just, what you said is a fact, the past 2 weeks has been more positive in terms of kind of regulatory and adoption and whatnot versus the past, 15 years or 10 years or whatever. So, no, totally understand that. Okay, so knowing that, where are you going to take ParaFi over the next 5, 10, 20 years? Like, what is the grand vision for ParaFi?
Our goal is to be the Sherpa for capital that's entering this ecosystem, whether it's capital that, wants to capture, liquid market returns or non-directional or venture. We want to kind of deliver great results and also be strong partners to our investors. I think a lot of capital coming to the space not only wants great investment returns, but also wants to learn and wants to lock arms with someone as a sounding board. And so I think as institutional capital enters the space, we want to be one of the groups that can help them. And then on the founder side, being, helping our founders like drive real GDP onto blockchains and growing the pie, I think is critical. Founders need a lot of help. I know like you know this because founders say, great things about the way that you've worked with them. Building a protocol, so being an entrepreneur in any industry is one of the most challenging things you can do in business, like taking an idea from 0 to 1. In crypto, it's actually even harder because you're building on nascent infrastructure in an uncertain regulatory environment, and often in a market where your equity is being marked to market 24/7. So you have to manage. It's almost like you're an early stage CEO and a public company CEO at the same time. That's incredibly challenging, right? I want to be remembered as a firm that really helps our founders and works very closely with them, where people, like, when they reflect on their journey, they think back to like those critical moments where things weren't going well, where we were there helping them. So look, I think it's investors, I think it's founders, and then I think the last thing is our team. Like, I like team building, I love culture, I love process. I really have enjoyed like the mentorship process of bringing people into an investment firm and helping them grow, whether they're like, a legal counsel or in our accounting department or on our investor relations team or on our investing team or an engineer. I just wanted people to like think back to working at ParaFi like 20, 30 years from now and be like, wow, that was like a very special moment in time. I was part of something that was very early in the space where we were like doing the right thing, operating with high integrity and making bold bets and not being afraid to like be an independent thinker. By the way, I think a big part of being successful as an investor in this space is just being an independent thinker, because there's no shortage, and just knowing when to like say no or stay out of things. Because this, like, in this industry, like, you look around and people are, getting rich off of meme coins in like very short time frames, or are launching tokens at very high FDVs and have like a ton of paper wealth. And it makes it seem very easy, and it can drive a lot of temptation for investors to just chase things. So I think one of the things that my philosophy is like, look, like, I'm never going to get everything right in crypto, right? Like, that shouldn't be the goal. But if I can just be right on like a few things and be really, really right and drive all my energy into making them successful outcomes, I mean, that's kind of like all I can expect of myself, and it's more in my control. And And the reality is that like similar to like being an entrepreneur in crypto is really hard. People think being an investor in crypto is easy, right? Being an investor in crypto, making money in crypto as an investor is incredibly difficult. Like it's incredibly challenging, and it really pushes you very hard because you have to invest in private companies that then go public, and you have to manage the liquidity profile and and be staying on top of many different trends in the space that are all playing out in real time with a shifting regulatory environment, with lots of data on chain that you can analyze and sink your teeth into with 15,000 public. So, I mean, this is a very difficult life that you and I have chosen. But yeah, I coming back to like, I just want people to really find their time at ParaFi as being deeply fulfilling and be able to kind of like do what they love at the firm. So like, that's my goal for ParaFi is like, I just want us to build an incredible firm and really help grow the pie for the broader space.
That's amazing. Awesome. Ben, this has been stellar, but it's time for the closing questions. All right. How has being an entrepreneur / fund manager changed you as a person?
It's taught me to really understand like what I can control and what I can't control, and be much more comfortable handling stress from things that I can't control.
Super valuable, because I think when you first start any sort of endeavor, you kind of are, you're trying to control everything. You're trying to push everything forward, and there's so many outside forces. And if you panic, or not panic, but if you are really stressing out about those outside forces, that is going to wear on you so much. And, it's a great thing they've mentioned, especially in crypto, because crypto's 24/7 and there's a lot of outside forces you can't control. So,
right.
So totally.
Totally.
All right. If you go back in time and give yourself one piece of advice before launching ParaFi, be like, hey, younger Ben, this is the one thing I want to give to you before you go on this journey. What would that advice be?
I think the one piece of advice that has really resonated with me throughout my career has been, no one's going to help you, but no one's going to stop you. So basically for me, no one's going to help you, but no one's going to stop you. That means that like, if you're young and you're hungry and you're in part of like a big organization, run like, if you can find ways to add value and create value and do the right things, like you'll be able to take on more and more responsibility and grow. No one's going to stop you from doing that. But at the same time, like if you're waiting for someone to help you and pull you forward and like are relying on someone else, like you've kind of already lost. Like you've got to create, I believe the business world is a meritocracy. Many, many people are capable of being incredibly successful if they take like initiative, and don't expect like any handouts, and are willing to put in like the grind and grit and add value to others. So that to me is a very empowering piece of advice, because it says like, it actually goes to say like, you're more in control of your destiny. You're not relying on anyone else. No one's gonna help you, but no one's gonna stop you either.
Love that. All right. What has been the most unexpected lesson that you've learned along your journey so far?
It's Kaizen kind of incrementalism. So if you do something ordinary over and over again, you can reach extraordinary results. So I believe that hammering the nail over and over and over again, every day, placing brick on top of brick, is the key to success in any endeavor. I do not believe that there are shortcuts. I don't believe that. I think that, the candle that burns twice as bright burns half as long. Like, I think I really value consistency in effort rather than, quick wins. So for me, I think that there's a lot of power in business, in investing, in team building, to showing up and giving your best every day. And there's compounding effect of that, like doing the right thing over and over again, like compounding your reputation, compounding your capital. Like it may feel like you're going like 3 steps forward, 2 steps back. But that's better than going 5 steps forward, 5 steps back. Right. So I think that to me, that is like, it's not like it necessarily, that's just like been my philosophy with business building. There's this story of this mutual fund manager that kind of caught my attention, which is there was this mutual fund manager. I'm probably going to butcher the story, but he was never in the top quartile performance over like 30 years. He was always typically in the second quartile in a given year. But over the 30-year period, he was by far the first. He never had anything that was catastrophic happen where he, blew up. And so I just think that speaks to like, if you can just be consistently good, you'll be extraordinary. This also applies, I think, to founders, right? Where, that's why I personally love when founders like stay small and lean as a team, focused on getting to break even and are not reliant on like raising big rounds from venture capitalists, because they can just hone and fine tune their product, get a little bit better, stay default alive. And there's so much power in just being in business and compounding that to me it's, I just love that like very long journey, incremental improvement approach. Yeah, that's just been like the way I approach building ParaFi and what I try to encourage our founders to do as well.
It's amazing. It's an extremely valuable kind of thought process for those in crypto, because it's sure, we all want to make money, but most importantly, not everybody, but the vast majority of us do believe that this technology is going to radically transform the world for the better. It's going to take decades, not a few years. So
yeah, I agree.
Love that. All right, last question. How do you define success, and do you feel like you've achieved it?
Look, I think success is a moving target for everybody. I think I define success as from time 0 to T+1, did I improve? Did I get better? And I kind of look at success in life. It's multidimensional, right? It's are you healthy? Are you actively like taking effort to improve your health? Do you have strong relationships with family and loved ones and community? Are you stable and getting better financially? Is your financial health sound? Are you doing something you love and find meaning in? I think that just in those 4 things, if you only have like 2 of 4 or 3 of 4, it's tough to like consider yourself like fulfilled, right? Like, we're all striving to be the best family members, friends, investors, founders that we can be. So yeah, for me, it's just a constant, like I want to feel like every year in my life, like I'm pushing myself to improve. I'm never getting comfortable, and I'm always learning. I think learning is a great North Star. I love crypto because most of our founders are like so much smarter than me that I just feel like I'm learning so much from them. And I know, about investing or business building to some extent, and I have my views. Doesn't mean I'm right, but like I can share that with them. But then, I feel like I learn so much from all the people I come across. And that's why I like being in the space so much, is just the learning. Cause I just feel like our founders, our investors are making me better. The team at ParaFi is making me better, making me learn. So that is one of the great things about the space. And I'm glad I'm not, I don't have to, doesn't feel like a job. It actually feels like a craft. So, if I was in a role where I was doing the same thing every day and not learning, I would be very unhappy, but luckily that's not the case.
Amazing. Ben, thank you so much, man. I appreciate this. It was incredible. Where can people find you and dig into ParaFi?
So at ParaFi Capital on X is our handle. You can find me on LinkedIn. I'm not going to divulge my pseudonymous X account.
Ooh.
Or you can email me, ben.forman at parafi.com. But yeah, this was great, Andrew. Big fan of yours. Loved getting to know you over the years. And thanks again for having me on. I really enjoyed the conversation.
Amazing. Thank you, sir.